Good day, traders. Welcome to today's episode of my weekly Forex Forcast. This is Onunako Tochukwu speaking for Lazarus Capital. So, without wasting our time, let's just go right into the chart. For those of us joining us newly, I trade on the 4-hour time frame, and like I always tell us, my trading strategy is very simple. I know some people will be like, this your trading strategy looks so simple, but guys, I have tried a lot of things. For 5 years I've been tried to be profitable in this business. I've tried a lot of strategies, I've done a lot of things, and at the end of the day I had to settle down with the simple stuff, because I discover that one of the issues that traders are having is that we like to complicate things. We like to make things look so complicated, and when things become complicated, it becomes difficult for you to repeat. And you must understand that the only way you can get consistency in this business is when you can repeat your strategy, when your edge is repeatable. If you don't have an edge that is repeatable, it will be difficult for you, because you must be able to execute that edge consistently. And if you don't have an edge that is repeatable, that you can always see in the market, you simplify it in such a way that every time you come to the market, you can see it and you execute it flawlessly. So it is very, very important that you simplify your edge so that it will be easy for you to repeatedly execute it consistently on a daily basis. That is when you begin to see consistency in your trading results. So without wasting our time, let's just jump right into the chart. So we'll be starting with the Bitcoin as usual. Like I tell us, the Bitcoin is clearly in a downtrend. We can see price left this point, a broke structure here, it pulled back down, it came back again, broke the structure, creates another low, went up, came back down, though it's like creating an equal low here. But I'm expecting that the bears will eventually come back to break back down and continue taking this price down. So, and I also tell us that one of the ways I identify the direction of the market, because my trading strategy is very simple, was I can identify the direction of the market. I want price to pull back to my area of value. When price gets to my area of value, I wait for my market participants to come in, then I join them. For instance, in the case of the BTC USD, the BTC USD is bearish. Once I've identified the direction of the market that is bearish, I want the market to pull back to a resistance area. From there, I'll wait for the sellers to come back in and I'll join them. I wait for a 4-hour candle close. If I see a bearish 4-hour candle close, like an engulfing candle or a candle that has strength at my preferred time window, which is usually the 4-hour candle close after the New York session open. Once I see my bearish 4-hour candle close after the New York session open at my area of value, if it's an engulfing candle or a healthy candle, I join the sellers. So that's simply how I trade the market. So every day I come to the market, first I want to see the direction. Is the market trending downward? If yes, then I look for an area of value, a good resistance area, where I expect that if price pull back to, the sellers will come back. Once I identify that area, I also want to use my Fibonacci to confirm, because the Fibonacci 5061.8 is a very strong level. Think about it. If there's a product that you need and you want to buy, and you don't have enough money to buy this product, even if you have enough money to buy it, maybe the product is being sold for $100 and you need that product, and from nowhere a company or a store tells you they will give you a 50% discount on that product. It means you can get that product for $50. What would you do? You will jump and take the opportunity of that discount and buy the product. Even if you don't have money, you might even want to go as far as borrowing, because you know that this 50% discount might not always come. That is the same way that the 5061.8 Fibonacci area is very, very important in the market. Guys, you must understand that the same thing that happens to people in your day-to-day, transactions is the same thing that is happening in the market. Every candle you see that is being created are human behavior. That is why the 5061.8 Fibonacci area is very, very important. It is very, very powerful. When price comes to that area, people want to take advantage. The same way, you see stores doing, Black Friday sales, they want to give 50% discounts, and people, even why they don't even need that product, they just want to buy it because they see there's a discount. That is why and how the Fibonacci 51.8 is very powerful. So once I've confirmed the direction of the market that is bearish, and once price to pull back to a resistance area, an area that I see that price have reacted in the past, once price pull back to that, once I identify that resistance area, I also want to take my Fibonacci. I want this level to line up with my Fibonacci. Once it lines up with my Fibonacci, I wait for price to pull back to that level. Then I wait for my sellers to come back in, and I join them. And there's another thing I also like to identify in the market. I call the line of departure. For a bearish move to be a supply area where price drop from, I want to identify that area, and I want to map out that area. That area will be like a reference point for me, and I will say to myself, as long as this level is holding, I'm still bearish. As long as this level is holding, I'm still bearish. So every day I come to the market, I open my charts, I see that level is holding, I know that the market is still bearish. What I'm waiting for is my sellers to come in, so I join them until I see price breach above that area. That is when I will change my bias. As long as that level is holding, my bias remains intact. So having said that, let's quickly move on, to the business of the day. So for the Bitcoin, I can see that we have a line of departure, this area. Last week we saw price dropping from this point. I took this Bitcoin sell from here, even though later I added another position here, because I'm expecting this Bitcoin to drop down. I took this sell from here based on my analysis from year to year. By then, this was our line of departure. So I said I'll be waiting for price to pull back to this area. From there, if the sellers come in, I'll join them. So the price pulled back to this area. The sellers came in, I joined them on this candle here, and the price went back. I'm expecting, this sell move to continue. I added another position here, which, that position is in a drawdown now, but it's okay. Expecting in the coming days for the Bitcoin to continue its move to the downside. Nevertheless, if we are going into the new week now, so I want to look at the markets. Despite the fact that I have an ongoing trade, I want to look at the market as if I don't have a trade running. So I want to look at the market as if I don't have a trade running. So if you are here, don't look at my entry, just look at what I'm about to explain to you. So now for the Bitcoin, there's another thing again. I told you guys that another thing again I use in identifying the direction of the market is my 200 EMA. Because I trade on the 4-hour time frame, and the 200 EMA on my 4-hour time frame is showing me what the big boys are planning to do. The direction of the big players. The 200 EMA is telling me the direction of the big players. And if I'm on the 4-hour time frame, the big players for me are the daily and the weekly time frame. So I don't need to start going to the daily time frame or the weekly time frame to know what the trend is saying. As long as on my 4-hour time frame, the 200 EMA, my price is trading below my 200 EMA, I already know that on my daily and my weekly time frame, the big boys are still bearish. I repeat, on my 4-hour time frame, as long as price is trading below my 200 EMA, I know that on my daily and on my weekly time frame, that the big players are still bearish. So that puts me in the place of, confidence. So, it's a quick way for me to know the direction of the market by just looking at the charts without doing higher low, um, lower high, lower low, lower high, lower low, lower high, lower low. The 200 EMA solves that problem for me instantly. So that's why I told you that one of the things that will help you in this market, that if you find a way, you must find a way to simplify this business, because trading is very difficult. Or you can find a way to simplify it. You can simplify your strategy in such a way that you can repeatedly execute it. You can repeatedly execute it. When you so open your charts under 5 or 10 minutes, you've already seen what the market is doing. You've understood what the market is doing. You know what you are waiting for. You know what you are looking for. If you get your entry, you execute. If you don't get your entry, you shut down. You wait till the next day, or you wait till the next week. So having said all this, let's just move on. So that for the Bitcoin now, we got this line of this area here is my line of departure. This is where the market depart from, last week. So in the coming days now, I'm expecting this Bitcoin to continue its move down. So, but if you've not joined this trade, you have to wait for the Bitcoin to come back to this level. I'm seeing this level, that this level is a good resistance area. We can see from this point, the price acted as a support here, moved back up, came back down, broke below it. It acted as a resistance, but eventually broke above. The sellers came back strongly with this bearish candle that closed below here. So we're expecting the market to pull back to this resistance area. From there, the sellers will come back down. Although you can see me, I'm already in a running position, but just ignore this my position here. Ignore it. Let's just look at it, follow what I'm doing afresh. So for me, I won't be taking any trade again. Just for analysis sake, I'm doing this. So now we can see that this level acted as a support here, went back up, came back down, acted as resistance, eventually broke above, came back down, resistance. I'm expecting at this point for the sellers to still come back from here and take the price down. So if you've not entered this Bitcoin, maybe you missed this entry here, as per the last week entry, you didn't follow up. Here again, if you get a sell entry, the sellers come back from here, you can join them. So let's take our Fibonacci from this swing high to this swing low. We can see that this area lined up with our 5061.8 Fibonacci. 5061.8 Fibonacci is lining up here. Cool. So if you've not entered the Bitcoin, wait for it to rise slightly into this area. Wait for the sellers to come back and join them. So for the Bitcoin, be waiting for it to rise slightly into this area between 67,479 to 67,866. The sellers come back there, you join them, and you take the price down. But if peradventure the Bitcoin did not rise to that place and it drops below, then you need to wait around this area. I'm seeing a support area here. You wait for it to go down, then you wait for another pullback. Maybe by then we'll get a pullback. If the Bitcoin did not rise there, if it comes down, you wait for it to come down, then you wait for a pullback. That is during the coming days. You wait for a pullback, then when the sellers come in, you can join them around there, then you take the price down. So for the Bitcoin, wait for it to rise slightly into this zone, wait for the sellers to come and you join them. If price refuses to pull back into this zone and it continues, and you see a sharp move down, when the price moves downward, wait for it to pull back, then wait for the sellers to come in, then you join them. So that's all the Bitcoin. Let's move to the next pair, which is the Euro USD. So for the Euro USD, we can see that we did this analysis last week. I told us that this is our area of departure. This has been the resistance area that we have been looking at our 61.8. And that told us that we'll be waiting for price to come back to this zone, then wait for the sellers to come in and rejoin them. I told us that as long as this level here, as long as this resistance area is holding, we are bearish on the Euro USD. So once I open my chart everywhere, I want to see, is this resistance area holding? If yes, I'm still bearish. So I'm waiting for price to rise back into my area, so that I will sell. Okay, I think that last week we've already changed our line of departure to this line here. This is what we use as our line of departure. Yeah, cool, I remember that. So I was telling us that this is our supply area, our line of departure. We took our Fibonacci from here. So I told us that I'll be expecting price to pull back into this area. I know I highlighted this area here. Yeah, as our resistance area, the area of value. So okay, when price comes into this area, we will take the sell from this zone here. So that last week we saw this bullish move, coming in strongly. And when this bullish move came in strongly, the sellers too came back strongly. Now we can see that this price is in a range, and when the market is ranging, you trade as per the rule for trading the ranging market, which is you buy low and you sell high. So because the market is ranging, the market took the advantage to come back to this supply area, this resistance area. So even though we are looking at this area to buy from, to sell from, you can see that price was acting as a support here, came here acting as a resistance. So we were expecting price to come back to this area, use it as a resistance, and come down. So now what happened that last week is that after the market have printed this bearish move, so we're expecting a pullback for the buyers to come and take this price back to this zone, so that when the sellers come, we will join them. So what happened is we saw this strong move by the buyers to the upside. Now after the buyers came in strongly, the sellers too came back in. I did not take this sell entry. If you had entered this sell from here, very good, but there's a reason why I did not take this sell entry. Why? Because I have a time window. I don't just take entries any time of the day. I usually prefer my entries after the New York Open. When I saw this move, when this move happened, this move did not happen during the New York Open. I think that was around either Wednesday or Thursday. I think maybe there was a statement that Trump made. Trump made a statement, those early morning Nigerian time, around 2 a.m. or 1 a.m. Nigerian time. Trump made a statement, and we all know that, when Trump make a statement, especially because of the Middle East crisis, the market will just react, the way it wants to, as regards, the statement that Trump made. So that was when this bearish move come. I wasn't expecting, first of all, I wasn't expecting these buyers to come in strongly like this. And guys, this is another thing, I want you guys to understand. This video will be taking time because, I'm doing a lot of explanation, unlike last week. Now, I always, look at the market as a war. I told you that this trading is a war. This is war. We are in a battle. The earlier you understand that trading is a war, you are in a battle, you must be careful. You are like a mercenary commander, and your capital are your troops. Your capital are your soldiers. You don't just deploy your soldiers carelessly in a battlefield. You must be able to analyze the battle. You must be able to know that if you are committing your soldiers, your capital into this battle, you have a high chances of winning the battle. This is a battle between the buyers and the sellers. You are like a mercenary. You are neutral. You can commit your troops. You can commit your soldiers to fight for any side. You want to be certain. You want to make sure that the side that you are committing your soldiers, your capital to fight for, you want to have, you want to be sure that they have a high chances of winning the battle. Not that they will win not that you are very sure that they will win the battle, but you want to see that they have a high chances, they have a high probability of winning the battle, because trading is a game of probability. So you don't just deploy your troops, your capital, carelessly. Why am I saying this? Now, if you are looking to sell, and you are waiting for price to pull back, if the pullback comes in strongly, like the pullback coming, look at how these buyers came in. Look at how the sellers was coming in. Chop it. And this buyer just came in, boom, 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 boom. If you see this kind of pullback, that should send a message to you that you were looking to deploy your capital alongside the sellers, but look at how the buyers came in. That should give you a signal to be like, I have to be careful. Why are these buyers coming in with this strength? Now, that will make you, when the sellers come in, you don't join them, you wait. Because if the buyers have come in this strongly, if the sellers come back, they will still try to push back the sellers. Think about it this way. If you're in a battle now and you attack strongly, and when you attack strongly, you were able to push the enemies into their territory. If the enemies push back, would you just retreat, or you will try to fight back? Because you have a good run before. So when they come back, you won't just give up easily like that. You will also try to push back the enemies. That is what is happening here. So now, as the buyers have come in this strongly, if the sellers come back, the buyers will not just give up. They will still come back. It is because of the strength of these buyers. That was why when the sellers came back, I didn't join this sell trade. One. Secondly, the entry did not happen at my preferred entry window. I know in trading, you must not always be perfect, but your rules will guide you, especially the kind of market we are trading now. The market now is very difficult, unlike before, because we have a lot of players in the market now, and when there are more people in the market, you have more challenges to deal with. So your rules is what will protect you. So when I saw the buyers coming this strongly, I say, okay, if the sellers come in, I won't join them. These buyers that came in, I want to see how they will react after the sellers came in. And after the sellers came in, but I saw that the sellers came in strongly. And there's another thing again now. Because I use the Fibonacci a lot, I don't only use the Fibonacci in my favor. I also use the Fibonacci to guide against early entry. Now, if I am trading in the direction of the market for a bearish move now, I want the market to pull back into a resistance area, meaning I want the buyers to come back in. The buyers are the counter trend traders. I'm trading in line with the direction. The buyers are the counter trend. I'm trading in line with the trend. The buyers are the counter trend traders. Brilliant people. They also make money. Their strategy is to trade the counter trend. If I had the strategy of taking the counter trend, I would have taken this trade, but I'm not a counter trend trader. I'm a trend pullback trader. Now, when the market is bearish, I'm waiting for a pullback into a resistance area. It means I'm waiting for the counter trend traders to come back in. Now, when the counter trend traders come back in, if when the counter trend traders come back, that's for a bearish move now. I'm waiting for the counter trend traders to come, which is the buyers, to take the market, to put the market back to a resistance area, so that I'll wait for the sellers to come and I'll join them. If the counter trend traders come back in, number one is that I want to see how they came in. If they came in strongly, I want to be careful. Now, if they come in and my sellers come back in, and I see that my sellers come in strongly and they closed very close to the Fibonacci area, the 5061.8 Fibonacci area of the counter trend traders, I will not take that trade. How do I mean? Now, let me show you guys something. The market was bearish. I was waiting for it to pull back to this area. It came in. First of all, the buyers came in strongly. That one is a first, yellow flag for me. And this bearish candle closed. It closed at, I think this was around, I think it was during the Asian session, this bearish candle closed. This should be around like 2 a.m. Nigerian time. I don't take entries at those hours. I was okay. When the New York opened, let me see what will happen. And when the New York opened, I saw this candle close down here. And when this candle closed down here, I looked left and I saw that there's a resistance area here. Sorry, there's a support area here. That's one. Secondly, if I take my Fibonacci of these counter trend traders, this area is close to their 61.8. And Euro USD itself likes the 61.8 area. When I saw this happen, number one, that there's a support area here, which is a strong hold for the buyers. A support area which is a strong hold for the buyers. They came in here, they took the price up here. The price came back down there strongly. I take the Fibonacci for the counter trend traders. That area was 61.8. I say, wow, if this area is 61.2 of the counter trend traders, I cannot take an entry here. I want to see these buyers now come back in. If they are serious, I want to see them take this price back here. If they are serious, they're supposed to break above. But if they come back in and they stop around there, and my sellers come back, if they come back in, they stop around there, and my sellers come back, I will join them from here. I will join my sellers from here. That was why I didn't take this Euro USD sell trade. So guys, you can see how I'm taking my time to explain this. And these things I'm explaining, it comes from experience. It's not something that you just understand. And that is the problem traders are having, that someone might give you a strategy, but it will be difficult for the person to give you his edge. You must find your edge. When you see my strategy now, you love my strategy, number one, you must be able to personalize that strategy. Pick some things with some things you've learned. See how you can make it your own. Make the strategy your own. Then you must look for your own edge. My edge might not be your edge. You must look for your edge. There's strategy, there's edge, there's trade process. These three things are what will make up your trade plan, which will guide you. Do you understand? That one is another video for another day. Guys, you guys don't worry. Very soon I'm going to be doing an off-chart video. I'm going to be doing an off-chart video when I put a lot of things together. I can see sometimes these videos, I know there's a lot of noise on the background, but please just bear with me. Very soon, a lot of things are going to be in place. Okay, so to cut the long story short, for the Euro USD, I'm waiting for the buyers, for the sellers to pull back this market into this resistance area. When they do that, if I get my sellers come back in, I will join them and I will take this price down. If the Euro USD fails to pull back up, let it continue going down. I'm not interested. Let's move over to the next clip because we've spent a lot of time. This is already 30 minutes. To the gold now. Okay, for the good, we'll draw this. I was telling us last week that this is our line of departure, meaning as long as this level is holding, we are bearish. So we'll say, okay, we'll be looking at a resistance area where we expect this market to pull back from. We saw this area, we'll say, okay, yeah, this area is a good area. Price pull back to this area, we'll join them. And we'll say, okay, let's take our Fibonacci to reconfirm this area. We took our Fibonacci from this line of departure to the supply area, swing lows, swing high to swing low. We saw that, okay, yeah, cool, this area is a good Fibonacci area. Let's wait for price to pull back to this area so that we'll sell. And price eventually pulled back to this area. And when price pulled back to this area, during the odd hours, the same thing that happened to the USD, we saw these sellers coming. I can't take trade at this hour. And the bearish candle closed at a support area where I think the buyers will come back. I was looking at the market, I say this is a strong good of the buyers. And when I take my Fibonacci from this level to this level, I can see that this area, let me take this one, let me take this. Okay, I can see that this area is 5061.8 of the counter trend traders. And guys, like I told us with Euro USD, if my entry candle closed very close or close to the 5061.8 area of the counter trend traders, I will not execute, because I will be expecting those counter trend traders to come back in. I want to see how far they can go. If they are serious, I want to see them take this price back up. But if they come back here and they become weak anywhere around here, I'll wait for my sellers to come. That is when I will join them. Guys, if you understand this thing that I'm telling you now, it will save you from a lot of drawdown and a lot of premature trades. That is why you see that you get your entry, you get your confirmation, but price begins to move against you. You start wondering that why. But you are in line with the direction of the market. You have candle close of your preferred market participants. Why is the market going against you? This is the reason why. Guys, there are some questions you must be able to answer in the market. Why, how, why, and how. When you answer the how, you must answer the why. When the market moves in your favor, you must know why you took a trade and you made profits. When the market moves against you, you must know why you took a trade and the trade stopped you out. You must review. At the end of the week, you have to review your trade, whether win or loss. That is when you begin to understand that, okay, this have high probability of giving me a winning trade. This have high probability of giving me a losing trade. That is when you can define your edge and your strategy. So, having said that, for the gold now, I can see after, I was able to stay back at the market. I saw these buyers coming, and look at how the buyers are just coming in. And when I take my Fibonacci of this, my sellers here, take my Fibonacci of this, my sellers, I can say, okay, I can see that this area is lining up with my 5061.8 around there. Around there, I can see it here. So I say, okay, if you have entered on any of these candles, it's not a bad idea, but you get to a point where you understand what works best for you. You stick to it. That is why the rules are there to help you. These candles, when they closed, they did not close at my trade window. This last one here, this third one, this is the first bearish candle, this is the second one, this is the third one. This third one closed at my trade window, but when it closed, I now saw that it closed at a strong area of the buyers. You can see there are so many traders who will take this as a neckline of, they can say this is a double bottom. They can say this is a double bottom, and this is the neckline. Say double bottom, neckline, support area. From there, price will continue going up. You must put yourself in the shoes of other traders. Understand that you are not the only one in this market. There are chart pattern traders, there are trend line traders, there are Fibonacci traders, there are counter trend traders, there are head and shoulder traders, there are inverse head and shoulder traders, there are double bottom traders, there are double top traders, there are candle traders, there are white cut traders, SMC traders, ICT traders. You must learn to put yourself in their shoes. You must learn to understand what are they thinking. So I see that there are double bottom traders here, and they will see this as the neckline. They want to take this price back up. Even for the counter trend traders, this is a good Fibonacci for them. 61.8 line up with a neckline. Even if this candle close at my trade window, I will not go in. I want to see this counter trend trader. Let them come back in. Let me see how far they can go. If they are serious, I want to see them closing above here. If they close above here, then okay, I can know that yes, they are serious. Maybe by next week I'll change my bias. But if they come and they are very weak and they stop here, and these sellers come back in here, I will join my sellers. If anywhere in this zone, even if it got up here, and my sellers come back in, I'll join my sellers. Because if they are serious, they are supposed to close above this area. So for the gold, we'll still be waiting. In fact, for the gold, the market is even at our area of value. I'll just be waiting for me to see a bearish candle close at my entry window. Once I get it, I see that my BS come back, I'll join them for the gold. So let's go to the next pair, which is the Nasdaq. So for the Nasdaq, last week we took this area as our line of departure. We say as long as this area is holding, we are bearish. Then we'll say, okay, let's look for a good resistance area that will take this trade. We'll look at this area. We'll say, okay, cool, this area is a good resistance area. When we zoom in and we look back, we saw that there was a good support area here. Price came back here, went up, came back and went up. So okay, this is a good support area. The market is bearish. These are our supply. These are our line of departures, our supply area. We've seen the good resistance area. Let's see if the area lined up with our Fibonacci 5061.8. We took our Fibonacci from swing high to swing low. We saw that, okay, cool. This area lined up pretty well with our 5061.8 Fibonacci. So this area lined up with our 5061.8 Fibonacci. We say, okay, as long as this line is holding, we are bearish. We want price to rise to our Fibonacci area and we'll execute. So now, price is at our area of value. I will just take this zone back up here, cover it with this. My 61.8 is down here, so I did not change anything. My 61.8 is down here. So now I was waiting for price to come into this area so that I will sell. I said as long as price is trading below this my line of departure, this supply area at 24,547, I am bearish. Price came in here. The same thing that happened with Euro USD, even with the Bitcoin, the Euro USD, the gold, the same thing happened on the Nasdaq. After Trump made that statement he made about the war in the Middle East, we saw this market, the bears come back strongly. But when they came back, I wasn't even the same thing I saw that happened. I looked left and I saw that this buyers, they have a strong gold there. There's a support area here. My candle closed at my support area. My candle closed at this support area, which is a strong gold of these buyers. I cannot sell this market, even though this candle closed at my entry window. I say this is a strong gold of the buyers. If I look left, I see that this is a strong support area. I want the buyers to come in. Let me see how far they will go. Initially they came in strongly. The sellers came back in and closed at a strong gold of the buyers, a support area. I want to see how far they will react from this place. If I even take my Fibonacci, even from here, from this swing low to this swing high, I can see that this level lined up with a strong Fibonacci. This is the 38.2/50. Even if I don't want to take this, I take my 5061.8. I can see that this is my 5061.8 and this candle close. The distance from here to here is very slim. If I take this trade now, there's a strong hold of the buyers here. I don't have room. The risk to reward is very poor. I will have my stop loss here, and there's a strong hold here. There's a support area here. It doesn't make sense. So the risk to reward does not make sense. I stay out. And the next thing I see that the buyers came in, I was not surprised. I said, cool. Well, how I will know that you guys are serious? If you can close above this my line of departure. If I see you guys come back and close above this my line of departure, I know that, okay, you are serious. Then by this week now, I'll be waiting for pullback. Wait for the buyers to come back. I will join them. But if you are unable to do this, and you came here, you came in this zone, and you start to you became unserious, I will know that. I will conclude that you are not serious. And if my sellers come back, I will join them, which is, what I'm saying that may likely happen in the coming days. So for the Nasdaq, I'll be waiting. Price have risen to our area of value. I'll be waiting for the sellers to come back. Although the sellers, they came in. Let me remove this. The sellers, they came in. You can see them, but I want to see them closing below here. If I can see a bearish candle close below here, I will execute. So for the Nasdaq, price have risen to our area of value. I want the sellers to come close below this line. Remember, these are 61.8. Close below this line, then I will join them. Let's move to the next pair, which is the US oil. For the US oil, price, did how we analyzed last week, but I didn't take the trade. For as many that took advantage of this buy trade for the US oil, congratulations. But I did not take this trade because this candle closed at that time when Trump made that statement. When Trump made that statement, we saw this movement happen. And you guys know that I'm not a fundamental trader. I'm a price action trader. I trade what the chart is telling me. So because Trump made that statement around 1 a.m., I cannot jump into the chart and start taking trade because I want to trade the US oil, because I want to trade the oil. So yeah, we saw the market after Trump made that statement. We saw the market move up. So what we'll be looking at in the next days, if I take this area now as my line of departure, from here, this is the original place where this market moved, meaning that as long as price is trading above 84.945, we are bearish. So we'll be looking at a good support area where we think the market should pull back to, and I'm looking at this area is a good one. This is resistance. From here, price move out. I want to see price pull back to this area. From here, I want the buyers to come in, so I will join them. If I take my Fibonacci from this swing low to this swing high, I can see that this area lined up with my 5061.8 Fibonacci area. So I'll be waiting for price to pull back into this area. Wait for price to drop back into this area. Then I'll wait for the buyers to come back in, and I will join them. So that's what we're waiting for the US oil. Price to pull back to this support area. Wait for the buyers to come back and join them. Guys, I know this video has been lengthy, but I have to take my time to break this down. So let's just do a recap so that we can draw out the trade plan and the trade entry. So for the Bitcoin, we're waiting for price to rise between 67,479 to 67,917. Anywhere in this zone. If price rise into this zone and you see the sellers come back in, you join them. Stop loss can be here above your forward time frame entry candle. Then you can take your TP at this level, which is I can see this is a 60,000 1,000. But if price did not pull back and you saw a bearish move here during the weekend, don't panic. Wait for the movement to happen. Wait for the price to pull back, maybe to pull back around this. There will be a, by then there will be a, this support area will turn to resistance. Wait for price to pull back there. Wait for the sellers to come back around here, so enjoy them. So if price pull back to this area, to this zone here, this support that it was already acting as a resistance here, after some time it broke out when the sellers came back in strongly. If it rise back to here, to this support that will turn to resistance, and the sellers come, you join them. If it did not rise here and the sellers broke below strongly, just like they did here, do not FOMO, do not rush in. Wait for the buyers to come back in to take the price back up. Then when they get to this support area that will not turn to resistance, you wait for the sellers to come back, then you join them. Remember that this is our line of departure. This is our supply area. As long as the Bitcoin is trading below 69,223, you are bearish. Do not look for buy until you see the Bitcoin break above this level and pull back. Then wait for the buyers and you join them. The trend pullback strategy requires a lot of patience. It's not like a breakout trade. It's not like a breakout strategy. You can hear the word breakout. Breakout. It's like the name of the strategy itself is even it makes me to panic. But people are trading it and they are making hell of money. They are good breakout traders who are making 7 figures on a yearly basis. 6 figures to 7 figures on a yearly basis. Great traders, but in this market you must do what is okay with you. You must do what works for you. If a breakout strategy is working for you, fine and good. If a trend pullback strategy is working for you, fine and good. Gone are those days when I would say this strategy is not working. Every strategy works in the market. That strategy you think is a bad strategy, there are people using it and the thing is working. So don't come to the market and be saying that your strategy doesn't make sense. No. If you know what works for you, do it. Allow people to do what works for them. Okay, so do not buy the Bitcoin. All these things you are seeing that is happening here, do not buy the Bitcoin until the Bitcoin closes above 69,323. When they see it break above, you wait for pullback. When the buyers come in, you join them. If the Bitcoin is trading below this line of departure, which is our supply area, the only thing you should be looking for is sell until you see a break above this level. Let's move over to the I've already given us the trade entry for the Bitcoin. For the Euro USD, wait for price to rise into this zone, into this resistance area between 1.15609 to 1.15886. Anywhere in this zone, if the price rises into this zone, you wait for the sellers to come in, you join them. Stop loss can be just above here at 1.15925. Your TP can come back to this support area at 1.14138. Even though I think the Euro USD is going for a long move, but to be at the safe point, if your price get to this support area, because if you see now that this market is in a range, and this is the support area of the range, this is the resistance area of the range, and this is the support area of the range. It has only gotten here once, went up, it's coming back to this support area, maybe from there to break below, but definitely it's coming back to this support area. So if you take your entry, if the sellers come back around this place, you join them. Stop loss entry inside this zone, anywhere in between here. Stop loss here 1.159, 0.35, then your TP at 1.14148. Let's move over to the next pair, which is the gold. For the gold, we wait for the price. The price is already in our area of value, but don't FOMO. Wait for the sellers to come back in. You can see it is the buyer side that is in the market now. Anywhere around this area, your sellers come back in, you can join them. Once price rise, maybe to this point or this point, even at this point, if the sellers come back, you join them. Stop loss below here. As long as price is trading below this area, we are bearish. This is our line of departure. As long as price is trading below this area, we are bearish. Wait for price to wait for the sellers to come back in this zone, you join them. Your entry in this zone between 46.83 to 48.01. If the sellers come back, you join them. Stop loss can be above your 4-hour candle close. The 4-hour bearish candle close that you enter from, stop loss can be above it. Let's just say at 48.26. Then your TP come back at this week here, the tail end of this week at 4100. That's where you TP for the gold. Then for the Nasdaq, price is already at our area of value. What I'll be waiting for is for the sellers to come back. Once I see a bearish candle that close below this my 61.8 level, I will take my entry. My stop loss can be above here at 24.193. Your entry will be after the 4-hour time frame bearish candle close. Then your TP can come back here at 22.928. For the US oil, wait for price to pull back to this support area at between 99.409 to 96.082. Anywhere in this zone, the price pull back to the sellers, the buyers come back, you join them. Your stop loss can be below here at 95.527. Your TP can come back here at $113 per barrel. As long as price is trading above this support area, this is our line of departure for the US oil, which is our support area. As long as price is trading above this support area at $85 per barrel, we are bullish on the US oil until the price break below here. So once the market opens in the coming week, once you open your 4-hour time frame, you can see your line of departure. You see, as long as this line level holds, I'm bullish. Let me go back to Bitcoin. The market open for Monday. You see, as long as this my line of departure, which is my supply area, is holding, I am bearish on the Bitcoin. As long as this level is holding, I'm bearish. All I'm waiting for is for price to pull back to a resistance area. I wait for my sellers to come in. I wait for my sellers to come in. I join them. If it pulls back into this zone, the sellers come in, I join them. If it fails to pull back and it drops below, I'll wait for it to pull back in this support that will turn to resistance. Wait for the sellers to come in, I will join them. Euro USD, as long as price is trading below this my line of departure, this supply area, I am bearish. Wait for the sellers to wait for the price to pull back into the resistance area. Wait for the market to pull back into this resistance area. Wait for the sellers to come back, you join them. For the gold, as long as price is trading below this area, I am bearish. The price is close to my area of value. Anywhere in this place, the sellers come in, I'll join them. Nasdaq, as long as price is trading below this my line of departure, which is my supply area, I am bearish. Price is close to my area of value. Wait for the sellers to come in, join them. US oil, as long as price is trading above this my line of departure, which is my demand area, I am bullish. Wait for price to pull back to this support area. Wait for your buyers to come back and you join them. Guys, that is it for today. I know this video has been lengthy. It is almost an hour. Trade safe, be careful out there, protect your capital, follow your trade plan and follow your risk. Until I see you in my next video, please subscribe to the channel, hit the like button, drop me a comment, and I'll see you in my next video. God bless you. Thank you so much, guys.